Greetings, Jedi traders. David here of TradingFibs.com to bring you the technical outlook for week 48, 2017. Hey guys, as always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market, see what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. All right, guys, happy holidays, happy Thanksgiving, post-Thanksgiving. Let's roll right into it. Week 48, you can capture that right. Week 47, 2017 recap here. Taking a look, let's just start here with the overall market, do a quick recap, then we'll move into the outlook as we're really moving into the last month of Q4 as contracts will start to roll over in December and all the fun begins. All right, so finishing out the week 47, we had a major gap up on all the major indices here, leaving some trailing open gaps behind. And just another gap. We've got plenty of them to close back that side. So jumping in to the outlook for just a moment, any pullback in the market, the closest open gap is the first ones that I'll be looking for, so note them here. The only thing I'd say in week 47, again, it was a pre-holiday week with lots of price action. Obviously, you could see we made some new all-time highs around, was the fact that we did it on subpar volume. In other words, volume well below the 60-period moving average. So that always concerns me, but you know what? Markets just do that. Sometimes you got to be ready for that. So overall, first of all, pulse, market, S&P 500, look at it from a perspective moving average. We're still in sync, all moving averages above each other, so you got to go with the momentum that we're finishing strong to the upside. We retested it here a little bit in November, but on a daily chart, we've managed to hold up above the 10 EMA. Appreciate the weekly. Here we are, 1+ year already moving from the post-election down from the MML lows on the weeklies. Through the quarters, through the year, a little bit of slowdown in the summertime we could see here, and then pop. Here's Q4. It's been all upside with good earnings. So on a weekly, definitely as we head up into the shorter-term MMLs as well as the long-term MMLs. So that kind of gives us a bigger picture of where we're at. Plenty of room to still move up here, but always good for a pullback. We'll take a look at both sides of the scenarios. All right, and taking a look at the overall SPY there on the ETFs, again doing well. Current trend, solid hike in Ashi bars on the daily, strong week, and price action still plenty of room to move up. Again, you can probably throw up a 10 EMA on here, well above the 50, and we got the same trend going on the weekly. All right, so lots of times, again, you can look at the recap, look at a lot of the charts. What I like to do is also take a look at some of the other ETFs out there to kind of give me a momentum of sectors, that stuff that I would focus more on the ETF section on my website. But right now, let's just take a quick look at the total stock market index. I start out with this each week, see where take the whole stock market, balance it out on an ETF, and you got almost the same picture you do on the S&P 500 with a nice breakout play. Again, we had a little bit of pullback to the 50 weighted moving average, MML low, and bang, upside. There we go. So we're already looking up here to these levels, 134.38, heading into week 48. All right, so that's your total stock market index. You take a look. I like to look at the IBD 50, the FFTY. Again, just a gauge for me, core fundamental stocks, strong consolidation at the MML lows, and bang, you got yourself a move, and that's exactly where we went. So you can see we're already at a little bit of resistance. Yes, we have levels up above that you might want to watch in the week to come, but nice breakout play after a weekly consolidation, maybe here of 2 to 3 weeks on the IBD. Now, on the other hand, I do follow it. I don't have anything personally invested in this, but again, you got to appreciate the major drop here. Now, I'm assuming that this is correct. I've looked all around. I didn't see any news bits. I'll have to recheck, double check. I looked on other financial websites. Yes, the drop is there. We definitely dropped all the way down to MMLO. So right now I can't find any reasoning for this other than market rebalancing or a fund taking out some of its money. I don't have an answer for you at this point. Something I'll look into, but obviously the Can Slim, another core fundamental of the IBD, Investors Business Daily, investors.com here, showing a major pullback here from up in the mid 16s all the way down to here, high 13. So eyes on that. That took out almost a year's worth of gains. So something I'll follow up on here. I don't have an answer for you yet right now, Jedi Traders. If you do, go ahead and shoot me an answer. All right, what else? All right, taking a look at, we got the Total Stock Market Index, we got the IBD. I take a look at the FDN, again, another core sample of those FANG stocks, which have been absolutely holding at their 52-week highs. Again, tech industry, we look at the NQ, it's all been up for 2017. We keep repeating the same story as market continues to pummel upside, and there it is, the FANG stocks, including Microsoft, pulling out some new highs in week 47. All right, and last, as we've been watching the dollar as well, dollar coming down. We had that nice pullback, lots of resistance there. Yeah, 200 above, 50 below. Price action back down on a 10-period moving average on a daily. That's right, the trend is back down on the dollar, pulling back. So yeah, we had a couple of almost a month, I'd say half a month, close to 3 weeks there of an up pullback, and then bang, right back downside the MMLs. Got to appreciate the weekly picture here, as really the trend has been from the upside to downside. We're looking at 23.44 down here, but hey, price action does bounce back. You can see the short-term MML here on the UUP ETF of the dollar index. Price action holds, MML high, turn around, back downside. So at least the short term, we're looking at 23.83, which would put us right there on the daily at the support. So keep your eyes open on the dollar. Still got to break this MML low here. All right. A couple other trends I want to, well, let's just jump right into the outlook at this point. Price action on the charts here. Let's jump right in. As we can see here, again, pulling back out of the daily gap picture that we just had, we can appreciate the volume all around has been pretty minimal. Again, Friday session, don't expect a lot there, but take a look at the previous couple days of the week as price action on the NQ way below the 50-period ESYM across the board. But got to appreciate these big gaps that we opened up with last week. Hey, reading the Twitter feed, looking for maybe some weakness on the Globex Open here in a couple of hours here on Sunday. It might not happen right away, but be ready for it. I'll go ahead and give you my case for both trends, Y up, Y down. But let's just jump right into the technical trend as it sits now. Hey guys, indices obviously hitting a new all-time highs. The RTY, unbelievable. As let me pull back a moment. We were in a 44-point gap down as the other indices were coming back upside. It was the RTY that was leading back downside, but bang, right there in week 47, RTY small caps makes a move right back up to the highs and closes that 44-point gap downside from the all-time high. We do have open gaps all the way downside. I'm just going to go ahead and pick my favorite ES there. Yes, we got them all the way down to squeeze it up. 1860.75 all the way down, with the major ones down below here in the 24 mid 24s, 73 and 65 here, but the short term right here 84 and 71. So you want to watch those for any pullback for any reason. Uncertainty in the market might come back and close those out. All right, we know the VIX levels are holding right now, currently in the mid-9s. So again, a little bit of reading here. You know, the VIX used to be a whole different type of gauge. At this point, the gauge right now, yeah, I'm sure traders have some fear. I'm sure there's some concern as we continue to hold at these highs, but it's almost, is it a complacency? It doesn't matter. Markets are holding up. The VIX will play out. Sure, I've read that, yes, investors are concerned. They're watching their stops, perhaps. They're watching as markets go roll up. But obviously, it's not being played out in the VIX index as you see it. So again, many traders trade it. I don't get involved with it. I just look at it as a gauge, as a number, and report it every week. All right. So one of the things I've been reading is looking at a gauge of the industrials and the IWJ, the industrials and the transports. And we can see here that the industrials and the transports, we have the IWJ on the left here and the IWT. These one of the things you want to look for in the next move in the market upside is to see both these indices in sync. And right now you can see off the MML lows, the IWJ and the IWT also off the lows. Note the 10 EMA, the 50, the 200 well below on the industrial. So we want to see these both in sync for, again, that next move up. And this is something I'm going to start to watch. I've been watching this now for a couple weeks. As we can see, the price action on the transports needs to probably get back above that 50 and the 10 to give us even some stronger move. But right now, short-term MML sitting up here, 178.13. We got the industrials here at 142.19. So something to watch. But both, we want to see both these moving together for a strong momentum in the U.S. market. So keep your eyes on that. Watch the MMLs. Watch those moving averages. Or simply just watching the Heiken Ashi bars. I got to say, I want to see a little bit something more trending on the transports to acknowledge, to identify a strong trend. But right now, the fact that we bounced off the MML lows, holding above the 10-period moving average, including the IWJ, starts to give me some indicator that the two might be moving together once again upside. So that could be an indicator of market strength. All right, last indicator of market trend here at this point are the we already talked about the FANG, the FDN ETF. Obviously, strong upside is also the NYSE advancers and decliners. And again, we had appreciated this starting in November that both were pulling back. So that was the beginnings of signs of a slowdown. But here we could see price action on the index, the INDU, the Dow Jones, including the NIAD, the New York, the NYSE advances, decliners, back upside. So again, a momentum indicator that says market is back in sync to the upside. All right, so uptrend momentum in this point. One of the things I'll show you a chart next week as the month closes out. Those of you who follow the SPY, up 16.68% in comparison. So are there other indices that are doing better? Absolutely. The FEZ, which is the Euro Stoxx 50, something you might want to look into, now up 27.27 for the year. All right, confirmed uptrend on the IBD in the market. So let's take a look at the overall. Let's take a look at the overall charts as we roll in. Let's start with the Russell RTY. Again, we'll appreciate on the left the range chart here. Again, a 100-tick range chart. And then the daily in the upper right-hand corner and the weekly down in the lower right. We could see and appreciate the move back upside since August. Daily, little bit of a pullback, but back upside on the Russell as the Russell continues to build more volume, as well as long-term indicators on the newly acquired CME Russell as the TF will wind itself down in 2018. So love to see the moving averages in sync. So I got to go with the momentum. Clearly upside is the RTY we saw on the open gaps chart. But again, any pullback for any, I'll give you some ideas of why a pullback might come. But right now, I still leaning towards momentum, still continuing upside. But any pullback will start to look for the first level of resistance, which would be around 1,500. Anything deeper, we'll start to look to 1437.5. We're not there yet, though. Giant traders, I'd like to see price action break below the 10 at least and break below the range of the 50. Start indicating anything likewise. All right, NQ, we saw end of the week, nice move up. All moving averages in sync. We're all in the green. We got the 534. We got the 5144. All that momentum clearly upside of the NQ. So I'm watching up here to about 64.84.50 for the week, including 67.18 is the higher target. Weekly, let's just be happy with 484.50 right there on the NQ. That would put us again on both the daily and the weekly. That's our upper targets. Any pullback, we'll start to look down to around 61.91. Major pullback, we'll be looking at 59.37. So 60 again, 61.91.50. would put us well around the 50-period moving average at this point, which, go line that up with your daily gaps, match them on your charts. Where are those daily gaps? Well, 63.29, 62.81. So we would close those out if the NQ were to pull back to any of those numbers. But that would put us around the 50 WMA. But right now, at least on the bigger picture, again, I like to look at the shorter term charts as we do each day. It gives us a intraday picture, being ready in both directions, but I gotta go with the momentum still to the upside. YM having a little bit of struggle here, a little bit of choppy doji bar action on the Heiken Ashi bars, sitting above the 10-period moving average 50s, so I gotta still go with the trend upside. A little bit consolidation across at the MMLs right now. 23,594 is really holding. I'll probably go ahead and draw myself another short-term MML here if price action ends up breaking 594 this week. But right now, looking at 23,750 on the a big upper target on the YM as momentum holds out through the next 5 weeks. Again, looking ahead, we got contract rollover, but looking really at the next, what do we got, 4 or 5 weeks here to the end of 2018. All right, ES, got to appreciate that. ES price action, again, had a little bit of struggle here in November sideways, but managed to break out, holding above the 10-period moving average. Momentum clearly to the upside, ×4 indices. So you take a look at the MMLs. What levels are we looking at? Well, we got up here up to 2612, all the way up here to 2617. We can go, obviously we can go higher as we continue to project higher, but right now, at least on the bigger picture, we're up here. So always a little concern when we get into that resistance area. Price action pulls up into that resistance and starts to break back down. All right, we get a trending bar back below 25.97. Then bells can start to ring, and that might happen tonight. We'll see what happens on the Globex. We'll be looking at 25.7825 first for the weekly target, and anything lower, obviously, we'd eventually look down to 23.4375. That would be major support, but we're not headed there yet. Price action holding above the key moving average. I'm going with the momentum to the upside for now. All right, to wrap it up, crude, what an amazing story. Crude getting back up now, almost in the 59s. Drew myself a little bit shorter term MML here. So I got 59.38 looking upside this week up to 60.55. There's your upper level targets for the week. Pullback, look to the 56.25 area if price action pulls back, which would put us at the bottom of the range and well above the 50. So again, price action clearly could test those 50-period moving averages. 54 would put us at the MML daily low. Weekly, we're still all upside, strong trend. Major pullback would come down to 50 at any point. And the GC Bitcoin story is GC still major chop, really not being able to gain any direction of trend. Tries upside, tries downside, but here we are back upside in the green. So momentum now on the gold really has no direction here. You could bring down the time frame a little bit, but bigger picture, I think, is just struggling here on gold as the markets are just trying to figure out where to go. So we're sitting in between resistance and support here. Not much move here, 96 to 65. Gives about a 30-point spread there. So, the weekly, we did reach the reversal, so we are momentum slightly to the downside, major support. Though 10 is above 5,200, I got to go with the green that we might retest the highs here, but we'll watch 1250 for that first level support. I got to stand neutral on the gold. I really have no clue where we're going on that gold. I'm sure there's some better predictors out there, but right now, not as clear as the others to me. All right, one of the things I like to look at is the 30-minute chart as we roll into the open here on Globex Sunday. Price action, again, we can take a look at those daily charts, the weekly charts, but the intraday, a really good gauge, the 30-minute chart, the 5-minute chart, and then obviously as any other chart, we use the intraday chart, the Heiken Ashi bars here, same similar setups. We're looking for price action above the range, above VWAPs to give us from MML low to MML high. You can look at these charts on the weekly recap page, but those are the setups we're looking for. But appreciating the bigger picture means avoiding all that noise on the range charts. We can see as we roll in. NQ, I'm looking up here to 64.2575. Looking up here to 26.05 on the ES longer term on the 30-minute. RTY, I'm going to shorten that up here. We got, again, there's the bigger picture, 1531.30 upside, but obviously RTY making that all-time high there on Friday on the 30-minute chart. Pulled back from that resistance, trended back down. So you would have got a nice trade on the RTY there if you trade in that short-term session. So downside seems to be the pull right now on the Russell. And the YM, same picture, a little bit of resistance here. So pullback, we'll be looking to 477 down to major support, 438. Again, you got to make the case for the pullback here. So what is the case for the pullback? Well, first of all, we do have a full economic week. Let's take a look at the economic chart. Our calendar, as far as global picture, we got Japan, CPI, a couple other economic indicators out there, but I'm sure they'll come up during the week if anything pops out. But end of the month trading, as we roll into December, we got Yellen speaking. We got numerous Fed speakers here in the bolds. Starting the week out, we got some home sales here. We also have consumer confidence on Tuesday. GDP on Wednesday there, and personal income and ISM manufacturing as we roll out the week. Q3 earnings season still rolling out as cloud content companies will be reporting this week. OPEC meeting on Thursday. GM event also on their autonomous tech advancement, and the automakers monthly report. Actually, there it is, motor vehicle sales on Friday. All right, so where is our where's the uptrend probability here? I got to go to the daily gap chart. Look, Jedi traders, the uptrend has obviously more favor upside than it does downside. Key moving averages are in sync on the indices with no crossovers. We have indices at all-time high. IBD model, we go higher, correct? VTI, the VTI index, the total stock market ETF, including the FFTY ETFs, momentum is upside. The UP dollar index pulled back. The IWJ, the IWT, a semi-quasi in sync back upside, giving us an indicator together with the NYIAD, the chart that represents the NYSE advancers and decliners are back upside. And with the low VIX average, gives me the probability that says we're headed in continuous upside. Now, look, that also means you got to make the case for the downside, which means I have some open gaps that haven't been filled. Those will always be there. So that makes the case that we bounce off the all-time high. We might come back and close out some of those open gaps. As well as price action, it continues as we see on these daily and weekly charts at the MML highs. We just continue to push up higher and higher. At some point, that resistance will hold and markets will pull back. And that's where I'm going to be watching that 10-period moving average as the first indicator of momentum coming down short. And the fact, I got to look it up, but the Can Slim fund, I don't know why it pulled back like that, but that maybe a fluke or something. I'm not sure those are flukes, but is that an indicator? I don't know. So surely it seems the case remains stronger that we continue upside, but essentially I got to look at the next 4 weeks. Look, from a geopolitical landscape, it's been about tax reform. This whole entire year has been about a hope, right? Market moving on hope. Markets at this point, investors are saying, why tip the barrel downside yet? Permanent bears, you got to go take a nap. If holiday sales online are really starting to show good, healthy spending, that will give markets good enough reason to stay rallied up. And as long as there's some hope still in some type of tax reform, I don't see why investors will bail. So a pullback can happen at any point. It's healthy. It's good. I say we go close out some open gaps, maybe a little bit further down to maybe those 50-period moving averages or an MML low. Obviously, the indicator is once it turns below the resistance, that would be the best shot. All right, so watch for those MML setups. Watch for those moving averages. Until then, make sure you check out the recap here, the momentum outlook, and as well as the post. And that concludes this week's insight into the technical momentum of the indices and key futures markets. Hey, guys. Feel free to stop by my website here, tradefibs.com, or any of my social media outlets to obtain more information. Again, a lot of good stuff here. You can check out the MMLs. I have some videos there, my trading rules. You can check out more information on some of the ETFs that I'm following, including if any of you, well, I'll get to that in a moment. Look, guys, My trading mantra, one simple strategy, any market, any chart, any time frame. It will keep you disciplined. You can find me every day on Twitter, by the way, at Trading Fibs here. There it is. And as always, I leave the crystal ball to the experts. I simply look at the setups that are in front of me and on my charts, and I leave the bias at the door when trading. All right, for those Jedi traders that are interested in joining us, like-minded traders, feel free to email me. We'll try and get you in the trading room. Thursdays right now not working out, so we'll see if we can get you on Friday or any other day to view the live chart setups as they happen in the trading day. All right, Jedi traders, that's it. Week 48 outlook. Went a little bit over, but that's all right. Hopefully you got something out of that. If not, and you got any questions, feel free to email me, david@tradingfibs.com. Till then, have yourselves a Blue Zone day. Have yourselves a Blue Zone week. Happy holidays to all of you. My name's David at Trading Fibs. Have a good day, a good night, and good trading to you.